What's going on, everyone? All right, it is trade recap time. I wanted to go over this trade because not just that it was a good trade. I did like the trade. I didn't make as much as I wanted to on the trade, but I did make a good amount. And but I got stopped out a little early. But I wanted to review this trade because this trade wasn't necessarily my normal type of trade, because most of the time, I'm looking for the 2022 model trade reversal usually. And this wasn't quite a reversal, but we are trading at all-time highs still. And another main reason why I wanted to show this trade is because the story the market was telling was beautiful. If you followed me, the trading, I trade ICT concepts, but the whole idea is to have a proper framework, have the market tell you a story of what's going to happen, and you should be able to know why things are happening. That's my biggest thing, is I want to know why things are happening in the marketplace, because then if you know the why things are happening, or I should say why things should be happening, then you can take trades with confidence, and you can sit through trades and be confident and not be nervous, anxious, things like that, right? So let's hop right into this one, because I really wanted to show this trade here, because there's a lot of things lining up, and it wasn't just all-time highs. You expect it to keep going up, things like that, because a lot of times it does. When it makes an all-time high, a lot of times it just keeps going up. But let's go into this one. All right, I want to break it down. First, it's Monday the 22nd. So that was this candle here. It's already, the new day is open here, but basically, what I'm marking out here is Friday's range, right? The daily high and low. So I always look at that. I immediately notice we have a a volume imbalance right there, little volume imbalance. And then we do have a fair value gap right here. Okay. We do have this. So at the time, I noticed, okay, we could be trading down, but I noticed this fair value gap here, this daily fair value gap. But immediately, first thing I see is that if you look at the range here, I always have the mid-level marked here, right? This is the mid of the previous day, this dotted line. And I noticed we have the open, because remember, if you know how the candles work, if it's a bullish candle, you're always going to have an open, you're going to have a low, you're going to have a high, and you're going to have a close. That's just how it works, right? So I notice here we had our open, and we had already dipped down into the lower half of Friday's range. So if the market's going to be bullish, then it may not need to go any lower than that. That's already off the bat what I'm thinking about. Now, if you've been watching any of ICT's new lecture series that he's putting out right now, you would know that this is a premium wick, right? If you're looking at the wicks. So, I'm trying to apply some of that knowledge, right? And kind of look at it and see how it goes. So what I do is I want to mark it. I want to mark it as a premium wick with the 4 quadrants. I want to see how it acts, how it reacts, right? So that's how you do things. When you learn or get new information, you have to start putting it to use. Don't rely on it, but track the data. So that's what I've been doing. And I've always watched the wicks anyways. I've never put them the way that he's been putting them lately in this lecture series. But if you notice this wick here, I always have been doing this. You can watch any of my videos that I've put out. That if this price started, eventually started coming back down here, I'm always going to mark the midpoint of this wick, because he's always said, he's never really quite, that I've seen anyways, described them as this premium wick, discount wick, the way he has been lately. But he has talked about these wicks before, that they will act like fair value gaps, where you're going to have your upper half and your lower half, right? So I've done that. But I really wanted to put the emphasis on seeing what he's talking about here. So if you see where we did go into the lower half of this Friday's range, okay, and if you look right here, it dipped just below the midpoint of this premium wick, and then it came up. But all right, I noticed that, but where it's gonna tell the bigger story is the 15-minute chart. That's the one that I love, and if you've seen my framework videos, anything like that, the 15-minute chart is the storyteller and my most important chart, right? I do look at the 4-hour and I do look at the 1 hour mainly to see if there are some fair value gaps or anything in my way that I need to be aware of. Outside of that, I don't look too deep into the 4-hour and the 1 hour. I will, but I won't. It's kind of hard to, really say. But so because of that, let's just go ahead and jump right down into the 15-minute because that's where I got the rest of the story for this trading day. So I always, and let's do this. Let's go into the replay and let's go back. Oh, let's exit because I didn't go far back enough. Okay, so let's hop right in here. Let's go right here at 9:15 right here. Okay. So this is what I'm looking at when I come down to my 15-minute chart. Now, immediately, like I could zoom out how I normally would, but immediately what I notice here is I want to look at the most significant swing high and swing low for the moment, okay? So if price was right here at the moment, right now, I'm looking at this swing low and this swing high, right? Because we made a price run up here. We pulled back down here. And from this point, we made this high up here. And then we just kind of stayed in between those 2 points, right? So from here, I want to take note of this low and this high. So because of that, I can actually kind of zoom in a little bit here and see what's going on. So immediately, here, let me just, we had like the London high was like right here, I believe. This was the London low right here. And then we had the Asia high was right up here. Okay, this is kind of how we looked right here. Now, if you look up here, right here, in my opinion, I'd be looking at, this is immediately where I was drawn to. Like, okay, we have this high, this high. These are relative equal highs. And that's the Asia high. And right above that is what? Previous day high. And that was actually, I believe, the all-time high at the moment. And it was last week's high as well. So there's, going to be quite a bit of buy-side liquidity up here. Buy-side liquidity pool. But also, you have this high and this high. More relative equal highs. So, okay. That's like, there's a lot of buy-side liquidity up here. A lot of buy-side liquidity. That's nice. But from there, you see how we came down into, we have a fair value gap right here. Coming all the way over. So what I'm looking at, when we came down, yes, we made this London low. But here, if you look at that daily wick that I was talking about, and this is why I study this. Here's the wick low. Here's the lower quadrant. So between here's that lower quadrant. Here's the midpoint of it, right? So this purple line right here, down to this low is the lower half. This purple line up to here is the upper half of it. Okay? So what did we do? After we left all this buy-side liquidity, we ran down right slightly into the discount of that wick, left our London low. All right. Now, we came back up into this fair value gap. Okay. Then we came back down, left another fair value gap. But what did we not do here? We failed to take this low. So this is what's the story the 15-minute is telling me right now. We came down here and failed to take this low, but where did we stop? Right at the midpoint of that premium wick. And from there, we traded. Yes, we traded back up into this fair value gap here. Okay. And then came back down. But when we came back down here, what did we fail to do again? Take this low or this low. So now we're making higher lows. So this story it's telling me right now is that it does not want to go any lower. Okay. And that's, look at the time, 7:30 in the morning. So now you have the pre-market open 7:30, and you have a little bit of some minor sell side liquidity engineered right here. And then look what happened at 9 a.m. It dipped down below, taking this minor liquidity out. Okay. Now, not only did it do that, but then it shot up. And what do you have here? Well, it took this little swing high. So now you have a market structure shift right here. What do you have here? Well, that's a fair value gap, right? So if you're looking at this picture, we have a ton of buy side liquidity and all-time highs that I'm already looking at here. Okay, came down into the discount of that premium wick, came back up, down, failed to make a lower low, rejected right at the premium the mid of that discount wick. Premium wick, sorry. Came back up, came back again, engineered a little bit of sell side liquidity, took it out here, failed to make a lower low, came back up, market structure shift, fair value gap, dipped into the fair value gap, and then proceeded to go higher. So that right there, and this would actually potentially be an order block, this down candle right here. So I'm now immediately thinking, well, we don't need to go any lower. The midpoint of yesterday, like everything's lining up to come up here and take this high, right? So immediately I want to see this. I want to mark this fair value gap because it's going to be significant to me that it may not go any further down. I want to mark this as a potential order block right here. Okay, because it may not. I want to see price stay above, in this upper half, right? And I like to typically get rid of one of, there we go. So now you have the high of the order block, the midpoint, okay? So now let's go forward a little bit. Where we get our open, 9:15. So it's already looking like it's going to go up. It's like, yeah, I don't think it's coming down. And look what we did here. We just went straight up. Left a fair value gap here, left a fair value gap here. But I want to note something because what you could be looking at is, okay, it's going up. Do I even get an entry to go up? Maybe, maybe not. Because what I wanted to look at too when I was trading this is we made this low, and I'm looking at this low as a sell side liquidity and maybe even like this area. So when we opened, I wanted to see, are we going to dip down into here and then go up? If so, I want to see it sweep here, and I'll look for an entry and take it up here. However, I'm not expecting that to happen. I'm expecting it may not happen. This dip into this fair value gap and potential order block here is probably all it needs. So it'll probably just go up. So now that's what happened. So now what you could be looking for is, okay, is it going to sweep this area and then come back down and run down and be bearish? Probably not. But also on the weekly chart, it's Monday. So the same thing. If you're expecting bullish week, you're going to have an open. You're going to have a wick down for a low. Tuesday, Wednesday, Thursday, more than likely is going to expand to make a high. And then you're going to have your Friday, right? Which is going to be your close. So I'm expecting, but whenever I went to the weekly chart, we did already have an open and we did already have a wick down because of where we dipped down into that discount, right? So we very well could just expand on a Monday. That's not unlikely. And also because it's all-time highs. So, but see, I want to show this part right here. Right there. This is when we made this run up and we made exact highs This wick right here, look at this wick. The high, right up here. Okay, if you don't know, this is where you see the high, right there. Okay, so just watch that number. Right here, 24,888. Right here, 24,888. That's not relative equal highs. That is equal highs. So when we tapped that there, we started pulling down. I'm like, yeah, we're gonna go straight up through there because there's people shorting and they're putting their sell stops right here. So we're just gonna pull back somewhere, and I'm gonna look for a long because we're gonna go straight through those sell stops. That's gonna be liquidity because if I go short here, I'm gonna be liquidity. So I'm looking for because of this story that I said here, the daily chart, this story going on here where it came down, right, on the 15-minute, and then you had these equal highs during price, after the open, right? So you had that. And I'm like, yeah, we're going to pull back from here, and I'm going to look for long, and we're going to go long, and we're just going to run up. It all lined up, okay? So I want to go down to the 1 minute now. Right here. So this is the 1 minute. And yeah, you could have actually gotten long in any of this area. Pulled back, hit this area, hit these fair value gaps. If you really thought it was going to, go up there. I thought it was going to go up there, but I don't, this is early, 9:40, 9:40. I typically wait till 9:45, 9:50, maybe even 10 o'clock to make sure it's doing what I'm thinking it should be doing. So here it made those equal highs, right? And then it pulls back. And this is where I'm sure a lot of people got in trouble. Because what do you have here? You have you have this high. You have these swings here, made a high and came down below it. So you have what you could call a market structure shift, right? And you have your fair value gap. I'm sure there's a lot of people that went short there. Said, oh, we had a draw on liquidity, right? Draw on liquidity here. Took out liquidity. Maybe that's as high as it needs to go. Market maker sell model. Now we're going to have market structure shift, come back up into here and continue down. Market maker buy model. And then market maker sell model. And come down, 2022 model, come down into here somewhere. Maybe. But because it left these equal highs, I'm like, no, we're going to pull down somewhere. I need to find where. And then I need to look for an entry to go long. So let me go back to the 15-minute. And we had this fair value gap right here. So I'm like, okay, I'm anticipating and waiting to see if we're going to pull into this fair value gap. If we're going to pull back there. So I'm waiting. Because if we pull back into here, I'm going to look to, for a long entry. But also on the 5-minute, we had this fair value gap right here that we tapped. So I'm okay, maybe that's as far as we need to go. But then also this was an order block right here. So now I'm like, okay, we're tapping into the wick of that order block, into this 5-minute gap, fair value gap. That might be as low as we're going to go. So because of that, I still want me a fair value gap or something on the 1 minute. So I'm waiting to see if this becomes an inversion. Excuse me. And if we get an inversion here and a fair value gap in here, I'm going to go long. So also, that's all-time highs, right? So I need targets above. So what I'm going to do is I'm going to take my the opening range, right, between 9:30 and 10 a.m. So this is 9:30. This is the low right here. And then between 10 a.m., here's 10 a.m. here. So this is the high. And I'm going to measure out deviations. Okay. So now I have here a 0.25, 0.5, minus 1 deviation. And those can be targets if I get a trade, a long trade. So, and here's my settings. I also have the optimal trade entry, the 70.5% optimal trade entry. Let me pull those up here. It's on ICT videos. If you've ever watched them, you can pause this. Here's my settings for those deviations. Okay. And then let's go forward. There we have it. Here's our fair value gap right there. So once I confirm those are inversions right here, and then we go back into that fair value gap, that's where I'm going long. Okay, right in here. And I can target either the 0.25, 0.5, or so on. And I was trying to target the 0.5, but then I said, you know what, let me go higher, and I'll just trail it. And I kind of made a little mistake on how tight I trailed it. And I ended up getting out with like 20 points when I was, I think I ended up going, I was up like 35, but I ended up getting out with like 20, but I'm fine. It's fine. It's okay. So that's it. That's what I really wanted to show, is why I went long up here. You can say, oh, you went long at the high. No, it's because it's not that. It's the market was telling me a story. Yes, I would have loved to have gotten long in here. And actually, you know, we had this fair value gap. I was looking there, and I didn't get anything. But I wanted to be sure. And, yeah, I would have loved to get long here. I would have loved to get long at the open. It just didn't quite fall into my model. So once I saw this at the exact highs on the 15-minute, and I saw it coming down, I said, nope, this is not going to come down. This is just a pullback. You know, we're going to take out some buy stops here, right, that are under this swing probably. Go here. I want to see if we're going to reach down into here or reach down into here, and then I'm going to look for a long somewhere and to take out this high because it's probably going to do a sell stop run right here. For people that shorted right there and put their stops, it's going to pull back and it's going to run, and they're going to become liquidity. So that's what I did. And I just really wanted to paint this picture for you because it was a little bit different than normal, but the read was so good. The read was so good, and for me, it was crystal clear from the very beginning, all the way from, you know, when I first looked, like around 9:15 in the morning, and then the open confirmed it. So, yeah, I just wanted to do that. Now, let's hop into my trade. I'll show you the video, as I always do. This is my account. I'm connected. This is my recording. Okay, and here's the trade. When it comes into there, it's whenever I go ahead and I hop in. All right. And it hits there. That fair value gap. And I'm waiting because what I didn't want is for it to just like rip through. So I just wanted to make sure it's not going to rip through first. And then I'm going to hit the button and hop in. I got a little volume imbalance right there as well, kind of holding. So I was just waiting for a second, because I'm like, yeah, I don't want it to rip through with this push down, but it is looking good. It's like, yeah, all right, let me go ahead and stay in the upper half. Let me go ahead and hop in. Put my stop right under the low here. It's a very small stop. I'm in at 71. Stop is at 854. Less than 20 points. It's like 16 points or something. And you see my target up here at the 0.5 deviation. And I'm just going to fast forward now. Never took heat on this thing. Ripped up through the high here. And at this point, I'm like, yeah, okay. That shouldn't be all it takes, but it's going to rip up, maybe pull back a little bit into this little order block here, and then continue up. But I have lost in a few days in a row, right? Last week I had like 3 days in a row I lost. So this is where the psychology starts to get you. You're like, I don't want to take a loss. This isn't my normal, like this fits in within my model. This is a great read, but this isn't the exact same looking trade that I always take. So let me go ahead and cover quick. I don't want to give back in case if that's all it needed to do, right? So I covered quick. Now it's a free trade. I'm targeting that 0.5 up there, well, just underneath it. And then it's moving up. Here we go. I'm waiting for it to take this swing high. And then I can start tightening it up a little bit. But let's see. It's pushing up. Still covered here. And what I really wanted to see is it not return back into this one. But I wanted to see how it was going to react at this 0.25 right there. Kept going. And now I tightened up right here. and it was getting close. It actually got 3 points away from my target, so that kind of sucks. But, you know, all good. So he was shooting up right here. Got very close, and I tightened up, and this was my mistake because I tightened up, and I was like, no, I need to give it a little room. I almost closed it, but I was like, no, let's see if we get that push up. We have a volume imbalance right here. But then I pulled my stop down to here, and I was like, I wasn't really... I should have had my stop lower. But see where I put it right here? It's like, yeah, it very well could come down and tap this down close candle and keep going up. And that's exactly what happened. So I wanted to see it hold at this volume imbalance, but it kind of pulled back pretty hard, hit this down close candle, the wick here, and then just kept going after it stopped me out. So that was bad. It was good trade management, but bad placement on my trail, basically. So as you can see, started coming down. I had the volume balance mark there. And I was like, man, I should really be under this little swing, or actually under this fair value gap right here. But, and you know, previous day high, it'll likely come back and test that potentially. So you'll see here, it taps me out, and then it kept going, of course. But I still had a decent trade there. Still had a, you know, pretty good trade, about a 20-point trade. So I'll take it. I'll take it. And yeah, that was it. That was my trade there. And it was a good trade. Like I said, my whole goal. Oh, look at this. See, it ended up coming back up. Pull back, hit that, went up, and it just, if you traded today, you'd see it. It just kept going. So yeah, I just wanted to break that down and show you how great of a read and why I had, you know, so much conviction that it was going to go up, why I took that trade from there. And yeah, hope this helps, and I'll see you on the next one. Trade well, everybody. Take care.
Yeah.